This is a video about the insurance bill that can quietly break your first home or duplex right here in Central Contra Costa. I'm Roger with RE/MAX Accord here in Danville, a licensed California real estate agent trained in Michael Blanc program to underwrite a building and a deal before you even get the chance to submit that offer. Look, here's the proof. In California, the California insurance premiums are up 84% since the end of 2020. That's not a typo. 84%. In the same time, the average deductible, the part you pay yourself before the insurance kicks in, jumped from $1,813 to $2,553. About 400,000 policies have been canceled statewide since 2021. Here's my promise to you. In the next few minutes, you will learn why the insurance number in a listing is not a real number and why trusting it can cost you thousands of dollars in a single year, or you sink your loan completely after you already underwrote the contract. Here's a plan. 3 steps. Step 1, understand why insurance broke. Step 2, get a real quote early, not late. And step 3, build a rough insurance number into your math before you ever write an offer. Let's start with step 1 because it explains everything else. Quick thing before we get into it, I put together a simple checklist that walks you through pulling real estate insurance quotes right away at any time. Comment this word, insurance, below and I'll send it to you. If you're not ready to buy, pin this video so that you can find it later. All right, let's go to the first step. Why did insurance break? So for years, insurance was boring, the line item nobody thought about. Not anyone. Big wildfires cost insurance companies a ton of money. The 2025 Palisade fires alone is expected to cost insurers about $40 billion in claims. Insurance companies have to pay that money back somehow, so they raise the rates. Or they just stop selling policies. Well, at least in the risky areas. Right now, 7 of California's top 12 insurers have limited new policies or stopped renewing since 2022. When private insurers leave, homeowners get pushed to the California Fair Plan. That is the state's backup insurer. The one you get when nobody else is able or wanting to cover you. It usually costs more and covers less. What a bummer. Enrollment in the Fair Plan just jumped up to 43% in the last 15 months. Wow. That tells you private insurers are pulling back fast. Super backpedal. Here's the real example. Say you're buying a small duplex here in Concord, right? Entry price is about $640,000, 2-bedroom units. Rent is roughly $2,250 to $2,550 like a month. Small multifamily buildings like this usually pencil out with a cap rate, a yearly return on price you paid, somewhere between 6 to maybe 7.2%. Insurance is one of the biggest expenses in that math. If your insurance line jumps by even a few $100s a month, your cap rate drops. Insurify projects California rates could rise another 16% by the end of this year. That's not a small wobble. That can be the difference between a deal that works and the deal that does not. So comment insurance and I'll DM you the full checklist on this. Step number 2. Get a real quote early, not freaking late. Come on, dude, what are you doing? Here's the part that most first home buyers like you get completely wrong. When you make an offer on a house or a small building, you usually get some type of contingency period, right? And that's the window of time, often 17 days, where you get the inspection on that property and check everything, including insurance, before you lock in that deal. During that window, you can still walk away and get your deposit back if something goes wrong. That is the whole freaking key here. Most buyers spend that whole window on the home inspection and just forget about the insurance completely. Then they remove their contingencies, meaning they give up their right to walk away. And only then do they call an insurance company. Why are you doing this? What's going on here? That's completely backwards. And get this, here is the landmine. If you wait until after you remove contingencies to get your insurance quote, oh man, come on now. Do I even gotta say it? You have no way out. I have seen buyers get a quote back that's about $3,000 a year higher than what they budgeted, after they already gave up their right to cancel. At that point, you either eat the cost or you try to back out and risk losing your deposit. All that money, poof, gone. The listing's insurance number, or last year's premium the seller shows you, tells you almost nothing about what you will actually pay. Imagine that. You need your own bindable quote, meaning that the actual numbers come from an insurance company that will guarantee you that number, while you still have the right to walk away from this deal. On that note, I want to take a quick pause here because this is for anybody watching who is actually trying to buy, and the expensive mistake here is not the rate, contrary to popular belief. It's actually buying the wrong building in the first place, and you usually cannot see that from the listing alone. I'm Roger with Remax Accord in Danville, a licensed real estate agent here in the Central Contra Costa, training through Michael Blanc's program, his syndication program that is, to underwrite a building before it underwrites you. I will help you find a deal and read the right deal before you ever write that offer. Insurance, that is one of the clearest examples of this. And you are looking at the first building here, then there's no reason why you don't book a buyer's consultation with me, link down below. All right, enough of that. Let's get back to it. So here is an operator aside that I got for you, something I do myself. When I run the numbers for a client on a small multifamily deal, I never use the seller's old premium from the disclosure packet. I call a fresh quote that same week using the actual buyer's info, and I pull that and plug those numbers into the underwriting, meaning the real math on the deal, like day one, not week 3, not day 1. Later, a single habit that I've tried to implement here with my clients is a few deals that we look at. It can be good on paper, but it's not always good in actuality once you run it through the insurance steps. So step 3, build a rough insurance number into your math before you submit that offer. You do not need the perfect number to start. You just need a rough number, so you're not shocked later, that is. Because here's how simple it can really be. Before you even write the offer on a small multifamily property, call 1 or 2 insurance agents and ask, roughly what would a building like this cost to insure in the zip code like this? It's this age and this construction type. So that single phone call right there, done before you submit that offer, tells you whether the deal actually even has a chance of working after you buy it. For the multifamily owners specifically, premiums peaked back in 2023. Some owners are seeing small decreases this year, but here's the catch. Deductibles keep rising even when the premium drops itself. So the sticker price can look better while the coverage gets thinner. Disaster-driven increases average around 20% up to 40% in a high wildfire risk area. Common insurance below, and I will send you the checklist with the exact questions to ask an insurance agent before you ever submit that offer. Super important. So let's give a quick summary recap here. Insurance broke because of a big wildfire loss, and insurers are pulling out of California on total. That's step one. Step two, always get a real bindable quote during your contingency period before you remove contingencies, never after that. Step three, call an agent for a rough insurance number before you even write that offer, so you are not guessing. What happens if you skip all three steps and find out your real insurance quote during that escrow period, and after you already gave up that right to walk away? That could be bad. If you're actively trying to buy your first multifamily or home, specifically here in the Central Contra Costa, do not guess on insurance. Book a free buyer consult with me, and I will walk you through the numbers, insurance included, before you ever even write that offer. Call me or use the link down below to book a consult with me. Next up, I'm covering this subject, and it's a full underwriting checklist. The complete list of the numbers that you need before you even put that offer on any deal. Insurance is just one of the line items. So watch that next video to get the full scoop on what comes next. Well, that's it for today. And if this helped, go ahead and hit the subscribe button, and I will see you in the next one.